What's up, people? Welcome on my channel. And in today's video, I want to show you a breakdown on how I caught this US 30 trade on 11th August at 3 p.m. African time. So this is actually like the after, and this is the before. And we traded this. I took this trade. I was watching this trade on a 15-minute time frame. So it was very a challenging trade because we had to see the price lunging for over a long time, and then but we managed um to stay disciplined, not close or play around, move stop loss was so crazy, and then yeah, in the end the market actually came here, and that's where the market has closed today because I'm recording this video on a weekend. So I want to show you how I was able to quote this trade. This is actually a before, and this is actually an after. Okay. So let's go on the charts and break it down. All right. So I'll start with a 1 hour time frame. So on a 1 hour time frame, this is what I'm seeing. I'm seeing price went up, created our highest high, and then price went down, created our low, went up, came down, went up, came down. So this is giving me a feel that US 30 right now is just, it's gonna be just ranging. It's gonna be just ranging at the moment, and it has been ranging for like 2 weeks. It's been in this area, and the fact that I saw this bigger move, this bigger wick coming down here to take out these lows, right, like this, to take out these lows down here, it actually gave me a feeling that this market might be going up. And then yeah, we caught very nice trades going up, and then the market also came up here to take out all the liquidity that was listing above here, and it actually also happened. We're seeing price coming here and took out all the liquidities, and then as soon as it did that, the market came down, and this was giving me a feeling that the market might be going down. But there was one thing that I needed to confirm before the market started going down, and then that's when I identified these lows down here, right? I identified these lows down here, and then these lows down here. The fact that I had seen that there was so much liquidity listing at the bottom of these lows. I was like, nah, if the market cannot continue going up, because I feel like there's so many people who have bought right here, like the first group has bought here, the second group has bought here, and then the third group, if the fifth group buys here, I think it won't be like it won't be normal, because the market always want to take out people's money to grab liquidity, trap people, to trap volume, and then continue going out. So I was like, nah, I'm gonna wait for volume to be trapped. I'm gonna wait for all the liquidity to be grabbed, and then I'll be looking for my sells. So let's go on a 5-minute time frame. I don't want to like take more time explaining. Just go straight to the point. Okay, so this is it. When the market actually pushed and went up, I anticipated this break of structure. The market actually broke structure. So every time a market breaks structure, it has to come back to mitigate, right? So in my case, I was still looking in this zone whereby I want to see all this liquidity listing down here to be mitigated. All right. So this was my POI. Yeah. So that was my POI. I don't know if it's visible. Yeah. So yeah, that's my POI, and I was actually looking forward to see price taking out this liquidity, taking out these lows, and then coming in this area. And then at 3:30, the market, the New York session was opened, and when the New York session was open, I actually saw price coming inside this zone. When price actually took out this liquidity, I was like, I think maybe we can consider buying. But then I was like, nah, I want to see it happening. Okay, I was like, nah, before I buy, I want to see the market giving me a confirmation, because I don't just enter the market without the market giving me that confirmation. I want to see that confirmation and then enter the trade. Okay, so because the market wasn't giving me the confirmation at this moment, I actually saw price going deeper and deeper, and as soon as the market actually came and took out all these lows, I was like, nah, I think this is the time to buy. Let me show you how I anticipated my entry. So I don't just enter a market at times like this. I have a very special confirmation that I'm waiting for in order to enter the market, because I'm more like um I'm more like a conservative trader who's always willing to see something, or I'm always looking for something in order to act. I don't want just to jump into the charts and then make crazy decisions. So this is actually what I was looking for. I want to see price coming in my, okay, let me start with, yeah, so this is my POI, point of interest, or whatever, order block, whatever you call it. So in the first place, what I want to see is I want to see price coming inside my POI. Okay, as soon as price comes inside my POI, it's gonna create some little liquidity on a smaller time frame, and I want to see that liquidity grabbed, right? After that liquidity has been grabbed, I want to see price grabbing the same liquidity to the upside, like that. And after this liquidity has been grabbed on the upside, I want to see price coming on a mitigation, right? And that's when I'm willing to enter the trade. As soon as that happens, then I can skyrocket the trade. Okay, so first thing, I want to see price coming inside my POI, registering inside my POI. Okay, so in this case, so that was price registering inside my POI, of which you can see that it's identical down here, where you're seeing price coming inside my POI. Okay, and then the next thing, oops, fine. And then the next thing I need to see is that I want to see price creating a high. Okay, so in my case, oops, yeah, so in my case, this is my high, all right? And you can also see right here, this is the high. Okay, so this is some sort of, can be a trend line liquidity or some pool liquidity whatsoever, and the liquidity is down here. You can see the liquidity is being engineered right here, or it can be a bunch of liquidity being engineered or whatsoever. And then as soon as that has happened, I want to see the market moving so fast, because all this is liquidity, right? Is engineering liquidity. I want to see the market moving so fast, pushing to the downside to take out the liquidity that is listing below this area, to take all this liquidity. So as soon as that happened, you can also see the same thing, that we're having this push to the downside, taking out liquidity, and it has actually happened. And next thing, I want to see price taking out the liquidity on the upper side, right? So, and that thing exactly happened. You can see on this side, liquidity was taken. As soon as that has happened, guys, this time I'm so confident taking my trade, because no matter where I enter, I know that my stop loss, I don't know no matter where even I enter here, by all means, my stop loss will be here, right? So it's up to me to wait for the market to enter right here, to enter right here, to enter right here, or wheresoever. But in as far as this kind of setup has happened, I can enter anyway. But in my case, I don't just enter, I've got a criteria. I use this Fibonacci, and I bring my Fib from high to bottom, and I could consider the 50%. Let me just activate the 50% so that you can see it. And I consider the 50%, okay? So the 50% is this one, all right? That's the 50%. And whatever I do, my stop loss will always be down here. I don't extend it, or I don't push it too further, or make it too small. I just make it like that. And as soon as I've done this, the market always skyrockets. The market just jumps to the upside. Okay, so this setup is likely to form when the market is actually, when I'm actually looking for buys. But if I'm looking for sells, it'll actually be like the opposite, just the opposite. So this will be my order block, and price will come in this zone and then create this low, and then oops, and then the liquidity will be grabbed, and then after it's been grabbed, it will also be grabbed on the downside, and then price will come here and then push to the downside. It's just like the opposite of this one. So this is how I actually anticipated this trade. So the crazy thing about this trade is that this trade has been ranging for the left, right? But the most thing that you need to focus on is trusting your analysis. If you have seen this kind of setup, and make sure that you have done everything correctly, it's okay just to stay chilled. You can choose to move to break even, or you can choose to watch the trade. In my case, I sometimes move to break even, depends on how the trade has behaved. But normally, these kind of setups will just happen and let price skyrocket, more especially when it's during New York session. So in my case, I take these trades during New York session. So New York sessions, USD is so crazy and so volatile. So I moved. I didn't take my TP. Oh, now let's talk about where I put my TP. All right, guys, this trade did not hit my TP. Let me tell you why. This was where I was looking forward to take my TP. You can actually see the before. So yeah, this is where I was looking forward to take my TP. Right. So let's see the before. Yeah. So on the before, you can see, but it happened that it's a weekend and the market actually went up. It actually gave us almost 70% of our profits. I was thinking of closing right here, but then I was seeing a potential that the market would be coming up here. But then there's one thing that was stopping me from having this confidence, because I was seeing this area. This area has a potential to hold market or to make price reverse or whatsoever. And it's actually like, wait, what happened? Because as soon as price got in this area, the market actually reversed. I think it was best if I could have closed here, but then it's okay, because I was still hoping that price would come here. If today was still market open, I think the trade could have still come, but then we can still wait. Monday is just like a day to go, right? So in my case, I let this trade land. You can see it's so challenging, right? There's so much pressure. Like, I don't know what you could do, but I was still holding. And then the market was here, and then it was close to market close. I was like, nah, I think I can hold these trades over the weekend. The only best way I can do is to close before the market closes. So I closed the trade. And that's when I confirmed that we had a winning trade, and we made over $700 on our funded account, which was over 5%. And it was an amazing trade, guys. It was an amazing trade, guys. Yeah, guys. So I'm very much excited, and I've taught the same thing and more in detail to my private to my students in my private mentorship program. And yeah, guys, if you're willing to learn more about how I look at the market, different ways on how I anticipate different behaviors, because this is not going to happen every day. Sometimes the market might not come to grab liquidity, sometimes it might happen the other way, sometimes blah blah blah. But anyway, what matters is how late, like, you just be equipped as a trader with anything. That the market can do whatever it wants to do, but then it depends on how you're willing to act, how you're going to approach the market, because either way, one person is going to make money, one person is going to lose money. So which one are you? Or each and every trade, whenever a trade is playing out, ask yourself, which one are you going to be? Are you going to be the one losing money or the one winning money? The most important thing, focus on the process, the strategy, and that way you're going to be cool to find an edge in the trading market. Otherwise, have a very good day. Don't forget to subscribe. Peace out.